shareholder equity is the money that is attributed to the shareholders. It is also equivalent of net assets after liabilities have been deducted from the assets. As we have seen earlier, shareholder equity is equal to net assets when liabilities have been paid off. Shareholder equity can also be broken down into 4 categories. It's a combination of common shares, preferred shares, paid-in capital, and retained earnings. Now, common share represent the ownership in the corporation. These are the most common shares that are traded in the stock market. Common share have higher return potential due to capital gain, but they also have higher risk as well. Common shareholders gets the voting right on the corporate issues, but when it comes to the dividend payments and claim over company's assets and income, preferred shareholders are given priority over the common shareholders. The preferred share also represent the ownership in the corporation, and the rate of dividend is also fixed for the preference share. That's why it's low risk compared to the common share. The preference share typically give the fixed income, however the return potential of the preference share is low compared to the common shares. Another important term in corporate finance is share capital. Share capital is equivalent of combination of common share, preferred share and paid-in capital. The paid-in capital is also known as contributed capital. It is equal to the excess amount that the company receives for the common share on top of its face value or par value at the time of its issue. Now the amount of the net profit which is left with the company after paying out its taxes and dividends is known as retained earnings. It is combination of the previous year retained earnings and the current year's net income after taxes and paying out the dividends. Now the company can use this amount for various purposes, for example reinvesting in the company, equipment, R&D or in marketing. Here dividend means the distribution of the company's earning to its shareholders, and it is determined by the company's board of directors.